We tear through specialized analysis reports to give you the signal, not the noise. Today, we're taking a really focused look into, well, one of the most volatile corners of the market, the electronic technology sector's top 5 penny stocks. So we're talking companies trading under $5.
And right out of the gate, before we get into the details of this analysis report, we have to put up a huge warning sign. Our mission here is to understand the tech, categorize the opportunities by niche AI, batteries, AR/VR. But let's be blunt. With these stocks at these prices, you are dealing with extreme volatility, just off the charts compared to large caps.
Absolutely. The prices we'll even mention today are from around December 10th, 2025. And they're just a snapshot, a highly volatile one. They can swing wildly. And it's not just volatility, right? It's liquidity risk. Trying to get in or out of these stocks is it's a lot harder than with a blue chip. So we're here to understand the market angle, the tech, not give advice.
Exactly. The goal is to give you the specialized, non-obvious analysis, to understand why these specific tickers are even getting attention right now, despite all that risk.
Okay, so let's unpack that. The electronic technology sector is massive. Why are we zooming in on these microcaps? Why are these smaller, higher-risk players suddenly attracting so much attention?
It all comes down to a really significant change in the macro market conditions. The analysis report points to this as the main catalyst. For most of 2024, high interest rates were basically a gravity well. They just crushed growth sectors.
Right. They got beaten down because borrowing money suddenly became incredibly expensive for them.
Precisely. But what we're seeing now is that those interest rates are stabilizing. The general feeling in the market is that the worst of the rate hikes are probably behind us. And when that happens, all the capital that was playing it safe, sitting on the sidelines or in bonds, it starts looking for growth again.
And it looks first at those sectors that got hit the hardest.
Exactly. So investors start circling back to companies like, say, XPON in batteries or KOPN in consumer tech, the ones with huge potential that just couldn't handle the cost of capital before.
And with microcaps, a little bit of new money can cause a huge swing.
That's the thesis. Because the market is less liquid, small inflows of capital, even a tiny piece of good news can cause massive percentage moves. That's where the opportunity for, aggressive growth and the massive risk comes from.
Okay, that definitely sets the stage. Let's dive into our first segment here, the visual and futuristic plays. We're talking about companies working on the screens and sight systems of the future.
And we're starting with one that has a genuinely surprising dual identity in its product line.
That would be KOPN, Kopin Corporation, trading around $2.66. The niche is AR/VR and defense. The report calls it the Metaverse and defense play.
And that dual use is really the key feature here. Kopin makes these highly specialized microdisplays. So on one hand, they go into consumer VR and AR headsets, for Metaverse applications. But on the other hand, they make displays for the military. We're talking fighter jet helmets, advanced targeting scopes.
That's a clever way to position yourself. But how much stability can you get from two different, very volatile markets? Defense spending is one thing, but that kind of tech has to be flawless.
Well, and that's the barrier to entry Kopin is solving. Military-grade displays are incredibly hard to make. They demand things your normal screen just doesn't. Think extreme brightness for daylight operations or huge temperature ranges or almost zero latency for a pilot. The analysis report suggests their ability to meet those defense standards gives them a proprietary edge. And that tech advantage trickles down into their commercial VR products. It's a real technological buffer.
Interesting. Okay, let's pivot from military displays to something that still feels like pure science fiction. Holo, microcloud hologram. It's trading around $3.46. The niche is holography and AI.
Yeah, this one is a pure futuristic bet. Their main tech is holographic imaging, but they're also deep into ADAS systems. That's advanced driver's assistance systems.
The report called this one the futuristic lotto ticket. And I have to imagine when you mix that kind of futurism with a penny stock, you get some chaotic price action.
That is the absolute critical factor for Holo. The analysis specifically flags this stock for extreme volatility. It has a really high beta.
Okay, so for anyone listening, what does high beta actually mean when a stock is trading under $4?
It means amplified movement. So if the S&P 500 moves up 1%, a high beta stock like Holo might jump 3, maybe 4% on the same news. It's just incredibly sensitive to market noise, to any enthusiasm about future tech. This makes it a favorite for day traders, people looking for those massive short-term swings.
What a nightmare for long-term holders.
Exactly. You're basically buying a ticket for a roller coaster.
Okay, so we've covered the flashy screens and the visual future, but none of it works without power. Let's shift focus to, the engine room, batteries and infrastructure.
Right. These next two companies are tackling really immediate foundational needs, power storage and efficient building materials for the green transition.
First up is the power play, which is XPon 360 Inc. It's trading around $1.25, and its niche is squarely in EV and battery tech.
What's really interesting here is the specific chemistry they use. They specialize in lithium iron phosphate, or LiFePO4 batteries, and that's a very important distinction.
So explain that. What's the technical advantage of LiFePO4 over, say, the nickel-based batteries you see in high-performance EVs?
Well, LiFePO4 is heavier, which is a drawback for a sports car, but the big advantage is safety and longevity. It doesn't use nickel or cobalt, so it's way more resistant to thermal runaway.
The kind of overheating that causes fires.
Exactly. And that safety profile is absolutely critical when you're powering an RV or a boat that's way out on the water.
And that focus is strategic. The report notes they're concentrating on RVs and marine markets. They're not trying to go head-to-head with Tesla.
That's their calculated angle. By focusing on recreational and marine use, they carve out a less crowded niche for their tech. It's a way for you to play the whole electrification and green energy trend without having to buy into the huge market cap, hyper-competitive automakers.
RV and marine use feels really niche, though. Doesn't that limit their growth ceiling? Are they trading mass market scale for a bit of stability?
It's a calculated trade-off, for sure. But for a microcap, that specialization can offer better margins and more predictable growth. It's tied to the leisure industry, not the brutal capital spending you need for global automotive scale. The analysis suggests this focus lets them scale production within their means instead of going bankrupt trying to compete with the giants.
That makes a lot of sense. Okay, now let's look at the physical infrastructure side with CRKN, Crown Electrokinetics, around $3.55. Their niche is smart glass and fiber.
The report labels them the infrastructure play. Their main product is smart glass, which they call dynamic tint. It's glass that uses electrokinetic tech to change how transparent it is, mainly to control sunlight and heat in buildings.
Which ties directly into energy efficiency, cutting heating and cooling costs. So why is it an infrastructure play, especially since they're also doing fiber optic construction?
That dual business model is the key. The smart glass tech positions them to benefit from two big potential tailwinds. First, stricter green building codes that reward energy efficiency, and second, major government infrastructure bills that are focused on expanding broadband. If policy changes gain traction, CRKN's technology suddenly goes from being a niche product to a high-demand solution for national priorities.
That really shows how policy and technology can collide at this microcap level. Okay, here's where it gets really interesting. We've covered 4 companies, but this last one, it's the highest risk, the lowest price, and has the most unique tech in the whole set. We're talking a pure penny stock trading way under $1. OPTT, Ocean Power Tech, at just 35 cents.
This is definitely the deep value play. When a stock is this low, the risk of, say, delisting is real. But the potential payoff if their technology actually scales, it's immense.
Their niche is renewable electronics, but the specific tech is the real story here. Intelligent maritime power solutions.
Yes. They build systems that are focused on turning the motion of ocean waves into usable electricity. It's for offshore sensors, data collection systems, communication hubs. It's basically pioneering remote energy for maritime surveillance.
We've seen concepts for tidal energy fail for decades, so this isn't just a tech bet. It's a bet on solving one of the hardest engineering problems out there, building complex electronics that can survive constant salt water and massive forces.
That's the exact challenge. The report confirms that the big problems with wave power are always corrosion and maintenance. However, it also suggests it's a proprietary mooring and energy transfer system. It's designed specifically to minimize underwater maintenance and make the components last longer. So while the risk is sky high, the technology has no direct competitors in this specific field. It is a true, differentiated technological moonshot.
So what does this all mean? We've looked at 5 totally different technologies here. Fighter jet displays, holograms, RV batteries, smart glass, wave power. Is there any kind of overarching story that connects all these different pieces of hardware?
There absolutely is. And the analysis report synthesized it perfectly. They call it the AI halo effect.
The AI halo effect. Okay, how does general excitement about AI lift a company that makes marine batteries?
It works like this. The market sees these microcaps as the building blocks for the future tech ecosystem.
Yeah.
So even though companies like KOPN with displays or CRKN with smart glass are fundamentally hardware companies, they're seen as part of the massive build-out that's required for AI and the Metaverse to even function.
Right. Because AI needs computing power, and that power needs infrastructure. It needs interfaces.
Exactly. It's all about edge computing. Whether it's processing data in a self-driving car, like with Halo's ADOS systems, or managing data from remote ocean sensors, like OPTT, or just creating the interfaces for virtual work, like KOPN. AI requires sophisticated distributed hardware. So general enthusiasm for AI trickles down and creates these pockets of volatility and opportunity in these smaller names. They get to ride the future tech wave, even if they aren't writing the next large language model themselves.
It just reinforces that you have to understand the bigger market story a stock fits into, not just its own fundamentals. And these are all pushing boundaries, from specialized battery chemistry to, well, harvesting power from the sea.
Right, that diversity of approach is what makes this whole segment so compelling. It's not one single technology. It's a bunch of highly focused, high-risk solutions to very specific problems.
This has been a fascinating journey. Let's do a quick recap for you, the learner, before we wrap this up. We looked at KOPN, the defense and VR play, betting on that proprietary micro-display tech. We covered XPON, the power play, focused on the safety of LiFePO4 batteries for marine and RV use. Then Halo, the highly volatile holography and AI ticket, a favorite of day traders because of its extreme beta. CLKN was the infrastructure play, combining smart glass with fiber construction, tying its future to green building policy. And finally, OPTT, the deep value play, offering that unique high-risk solution of turning ocean waves into electricity. A huge engineering challenge, but with zero direct competitors.
And this analysis report, it categorized all these opportunities by their specific niche. So as you think about all this, here's the provocative thought we want to leave you with. Considering the complexity of global supply chains, if you were looking for maximum insulation against the next big, unexpected global disruption, which one of these specific niches, from specialized RV batteries to military-grade displays to maritime wave power, do you think is structurally best positioned to weather that storm, based on, its relative independence or maybe its domestic necessity?